Now I request Rohan Mehta and Hardik Chitalia to be on the dais to have with the opening remarks and followed by the introduction of the faculty. Please.
Sure. Good morning, my fellow chartered accountants. It's my absolute privilege to welcome you all for this conference. We are honored here to have with us some of the finest minds in the industry who will guide us through the nuances of this ever-evolving landscape. Yeah, this is better? Yeah. So the diverse perspectives and expertise will enrich our understanding and equip us with the tools to the changes ahead. I encourage each of you to actively participate, network, and make most of the sessions today. Now I'll tell my colleague Rohan to please give us the faculty the memento, and then to give a brief introduction regarding Parthiv Bhai from Tricom Stockbrokers. So can we have Rohan?
Thank you so much, Hardik. We'll start with the introduction and then we'll be facilitating the faculty for today. A very good morning to all of you. I am here to introduce Mr. Parthiv Shah, who actually needs no introduction per se. He is a regular faculty, regular stock market enthusiast and analyst who is coming on CNBC Bazaar, CNBC TV 18, ET Now, and all the media channels out there. Talking about his career, he started his career as a engineer in electronics and communication from Dharamsi Desai University. And then he did his MS from Maryland University. And he came back to India. And now he's a director at Tricom Stockbroking and manages mainly the research side of the world. And he has been instrumental in a very, very large amount of investment activities across that company as well. And it is a pleasure for all of us that he is over here. And please, we'll be welcoming him with a memento. Chairman sir, Vice Chairman sir, Chetan Jagatia, please, if you can give a memento. Thank you so much.
Good morning, everyone. I think thanks to the fact that the markets have corrected again by 5%, I think we are seeing some less seats, but I'm sure it'll pick up over time. So I think a lot of you all will have a question, what is the meaning of Tricom? That's not a very common name. So that was back in 1995 when my father started with this company, and we started with membership of NSE. And NSE was the first exchange which started trading on computers. So that's how this name was coined, Trading on Computers Tricom. Just to give you a background, actually, he's our mentor, my Nanaji. Rose to the ranks of becoming Bombay Stock Exchange's president and worked very hard in his life. I still recollect that my dad told me that when he got married, my mom, for her marriage, my Nanaji had to borrow 10,000 bucks, because marriage is a big thing. And from that, he rose to the ranks of not only becoming the BSE president, but with his hard work and with his ability to pick gems in the stock markets, I think he built a mammoth portfolio, which now my aunt, my Masi, she's basically a spinster, she's managing it and she's also doing a fantastic job. She's also an independent director with a couple of companies. And I got a chance to be with my Nanaji. So basically, as you all know that I haven't done any commerce related degree, unfortunately. I so wished I had a CFA or a CA. But did BE in electronics and communication, went to US, University of Maryland, College Park, did my master's in telecom, worked there as a radio frequency engineer for 3 years. And that was my first stint in the stock market. But before that, I got a chance to stay with my Nanaji for one of my internships at Reliance Infocom. Back then, it was Reliance Infocom, DAKC, Dhirubhai Ambani Knowledge City. And he just told me once to help him arrange his annual reports. Nowadays, annual reports are all digitized, but in his era, it was more like the books, which you put in the shelves. So I said, okay, no problem. And then I thought must be 10, 15 annual reports. And then what I saw was an entire cupboard was filled with his annual reports. So it took me almost 4 Sundays to try and arrange them in alphabetical order. So A thi ABB hoy, be thi Bosch hoy, so on and so forth, I had to arrange. And that was a point in time as an engineer, I thought, the annual report front cover was very enticing. So I thought, let me try and read as much as I could, so I could read right until the management discussion. And I read almost 200 annual reports at that juncture. And each time I used to discuss with my Nanaji how he purchased that stock, what was the story behind. And I think that was my first instance learning the stock markets and understanding from him. And one thing I concluded, what he always felt, that his vision for finding multi-bagger stock ideas, he says equity investments is all about finding quality management. It's a captain of the ship. Running a good business which has huge opportunity size, which now the fancy word has coined, which is called TAM, Total Addressable Market. And this is the only secret of making immense wealth in the stock market. So the topic, so the topic that we have decided is like, these days, the fancy thing to do in the market is derivatives. How many people here do derivatives? Be honest, it's perfectly okay. Just one?
One is not doing, I think.
So I believe that these two people are not doing derivatives, rest all are doing. Because the SEBI survey says something else. Or maybe thanks to the fact that you all are CAs, you all understand what is the better thing to do, which is a good thing, right? So that's why we have coined this term Vision 2030 and beyond. Because I think as we all know, it's only in the long term that you make a lot of money. Let me start with, why this visibility. See, what happens is, we are all very short-sighted. And what happened was that he very kindly introduced me and told that, I appear on CNBC regularly. Very frankly and honestly, I marketing mate aau. It's not the thing that you should be watching regularly, because 95% of the time, CNBC or any other channel, I hope there are no media friends, no, I hope I'm not hurting their feelings, but 95% or maybe more percent of the time, they are there for short-term traders. And the TRP is only because of the traders. If I were to talk that, this stock looks good for next 5 years, people will yawn and just shut the TV, right? So generally in our show, we have one fundamental analyst and 4 or 5 technical and derivative analysts. So I strongly suggest don't watch it regularly. What you should watch, if at all, are some good management interviews, that will give you some good insights. So what I feel is that, you need to have longevity to understand what's happening in the Indian stock markets. And if you have a long-term vision as to, where we are headed, I think you will have a lot of conviction despite the initial hiccups that you might face, right? And it's been since 2020, we have seen the trend. I think just until recently, we have witnessed a first 10% dip in the stock markets. So if you see power of Indian consumers, and y'all are CAs, y'all have a bright future ahead, and the reason why, India is talked about as a big market is because of unorganized to organized. I think you all will have a lot of unorganized non-taxpayers to cater to. That is why I feel. So that's why I'm just, relating with this. There is this rapid growing cohort of affluent consumers in India. So, generally we talk about this boom. You see a lot of fancy SUVs being on the road. In Ahmedabad, when you go to the airport, you see the airports are crowded, right? You find it to be a boom. This is just the beginning, just trust me. Because what's happening is, there are these only 4% of Indian working age population who have a per capita income of over $10,000. And this is around 6 crore people. Just 6 crore consumers in India out of 150 crore Indians have this per capita of $10,000. This is the official, right? What you guys audit and put into perspective, right? This number is going to grow at a rapid pace of 12%. And by 2027 rather, you will have 10 crore such affluent customers. Just you વિચાર કરો કે અમદાવાદમાં જ bare minimum આવા 20 લાખ 25 લાખ લોકો તો હશે જ. હવે અમદાવાદ relatively so small, and when you see the malls getting flooded by these people, when you see fancy cars being bought by these people, you find there's a lot of teji. But very frankly speaking, this teji is what we are experiencing is in a very small subset. And this is going to expand, and that is where we are going to make a lot of money in the stock markets. So there is strong wealth effect kicking in, and India's market cap. See, what has happened is, there's another way where a lot of wealth has been created. You won't believe, what is India's economy size? Anyone? 3.8, almost 4 trillion touching, right? Of that, the Indians, the affluent Indians who are holding equity and gold, their wealth has increased from 1.8 trillion to 2.7 trillion. This is huge. This gives you a lot of confidence. The sentiment in the market being strong and people having made money, allows you to do a lot more other investments and consumption, which is, I think, what is happening in India. Luckily, even the property prices from abysmally low levels have also risen. That also gives a sense of confidence. So just to cite the power of Indian consumers, and why I'm harping so much on Indian consumption, there is another global economy which has done very well over long term, which is the US markets, and thanks to the fact that it's a consumption-driven economy, right? So if you see what has happened with Apple's revenue in India, it's grown at a staggering CAGR of 44%. Why I picked up Apple is, Apple doesn't make cheap entry-level Android-type phones, right? They make very expensive phones. I know a lot will say that there is this consumer finance boom via EMIs. So be it. So far, I think the data has not been that scary. If you see percentage of cars sold in India with sunroof, that has gone up by almost 25%. Imagine karo, India જેવી જગ્યા જ્યાં આખા વર્ષમાં સનરૂફ એન્જોય કરવાનો ટાઈમ 2 મહિના હોય છે. લાગે છે ને? કાં તો ડસ્ટ હોય, ધૂળ હોય, પોલ્યુશન હોય, સનરૂફ તો બંધ જ રાખીએ. પણ પૈસા વધ્યા છે બધાના. સો વાય નોટ હેવ અ કાર વિથ અ સનરૂફ? દેટ ઇઝ ધ ઇન થિંગ. ભાઈ મારે ફુલ્લી લોડેડ કાર જોઈએ છે, which is good, સારું છે. This should happen, which is helping us and our stock markets. So despite sunroof not being a very useful utility, each one of us are spending on an average rupees 50,000 per car just to enjoy something which maybe at the max we'll enjoy for 2 months in the entire 12 months. I'm sure a lot of you all know this is Manali, the tourism boom. A lot of the hotel stocks which were dead, the leisurely. And just as a disclosure, I might be talking of some names. This is purely for educational purpose. Please don't just go ahead and buy these stocks. It's just for education, and that's the disclaimer. You saw what happened with the Indian consumers, right? After COVID, the mindset changed. The Indian saving mindset has changed that, boss, life is uncertain. Why not spend and enjoy life, We are earning for what? To enjoy life, right? That's what has happened, and hell broke loose, and you saw what is happening, right? Indigo just tweeted back in December 2023 that 100 million customers flown since 2023. I was just talking to some analysts who tracks the aviation sector very well. And both of these guys sitting here also are experts in the stock markets. Does anyone know this fact that the total number of aircrafts that currently India has in the aviation sector, the total number of aircrafts, is equivalent to the number of orders that China has ordered in terms of the aircraft to Boeing and Airbus? And I was just curious because, I was just trying to understand what's happening. Say, Interglobe Aviation, one of the finest companies, it's currently at a market cap of $21 billion. So I was curious to understand that India ma atli moti company che having this high market cap. Let's see what Chinese airline companies are listed at. And I was surprised to see one of the Chinese airline companies was currently quoting at a market cap of $156 billion. So it's not a hint, it's not a suggestion, but you can imagine if a company is well run and does all the right things over consistency of time, what sort of wealth creation is still possible in India. A lot of people will feel यार कि Indigo का तो IPO 600 में आया था, अभी 4,200 हो गया. What will happen next? This is just for study purpose, just an example. I think a lot of you all know about this company called Trent. Of course, people like Hardik and you would be surprised that, कहाँ गया price to earning, कहाँ गया price to book, कहाँ गए अपने traditional ratios, right? Market is just hungry for growth. Today, this Trent as a company is quoted at around 2,40,000 crore market cap. And right from COVID, if you see, in 2020, this stock was nothing. Nobody kind of even bothered to look into this company. And it has delivered a staggering 50+% CAGR returns, right? You see, I've just cited one Q3, which is traditionally, seasonally a decent quarter. If you see the growth since 2020, it's grown by a CAGR of 40%. And it's not only the Zudio stores or the West Side, which one would say that, they are low entry ticket points, right? You look at Zara and even the Indo-Western, I think they've grown fantastically well. This is just one example. There are lots of such companies. I think a lot of you all must be aware of this fact that India will have an Amrit Kal by 2047. And I'll want to talk a lot about this because this is something which should give all of us Indians a lot of conviction to be with the Indian stock markets despite the ups and downs of it for the long term. And I'll also discuss some other countries which have undergone this, right? So what is Amrit Kal by 2047? Where we are expected to head India as a country, and what will be the per capita GDP, right? And I talked about that number of 6 crores and 10 crores. A lot of the developed countries, won't have such statistics that India has, though a small subset of India has that $10,000 of, per capita GDP. And I'm sure a lot of you all are aware of the fact that if you historically look and study any countries, whether it is Japan, whether it is China, whether it is US, whether it is European countries, there is this very magical threshold of $2,500 per capita GDP. What happens is, whenever that has been crossed, there has been unprecedented growth. A simple logic will be, I will have more disposable income to do different things. I'll have more disposable income to put money into insurance. I'll have more disposable income to again invest into the stock markets. Of course, I'm a stock market baniya, so I'll always talk about investing. But then somebody else will say, I'll have more money to spend in the economy, which will again bring an economic boom. That is what is happening. So India became the 5th largest economy. It surpassed UK, right? Again, here, a lot of people will debate that, despite being a larger economy size, what about the per capita? The per capita in UK is good. But we have to acknowledge the fact India is still a very young country. It has a huge population, and there will be different subsets, and India will have to be always divided into 3 parts. One being very affluent, one being mid-affluent, and one being who are still in the poverty. So if you see, I think nothing stops India by 2030 to touch at least $7.5 trillion in terms of the economy size. What is the size of our stock market, anyone, right now? Approximately? In terms of dollars? Okay, so in terms of dollars, it is currently at $5.3 trillion. There was a point in time when in India, for a very long time, the stock market to the GDP ratio used to hover at the max to 100, which means that if the economy size is 3 trillion, the Indian stock markets will be at 3 trillion. But since last couple of years, what we are witnessing is that the stock markets have moved a lot ahead than the GDP size, which is a good thing, and that has happened in other developed countries as well. So you can imagine if the stock market currently is at 5.3 trillion, if the economy is going to grow by 2030, where is the stock market targeted to be at? I need not give any targets, it's self-explanatory. And what's going to happen is 2 major drivers of the GDP growth, one being manufacturing and second being services. So India's forte currently is certainly services. We are very strong in services. As a matter of fact, in a lot of services, we even beat China. And the services, which is currently at 1.8 trillion, will touch almost 3.9 trillion, which is going to be an important driver. Manufacturing will account for almost $1.5 trillion of the GDP by 2030. And I know it's going to be tough. It's not going to be easy because competing in manufacturing with likes of China is very difficult. And that is where, what I love to do is I love to meet a lot of mutual fund managers. We have a decent mutual fund business where I prefer to meet the fund managers and try and understand what's happening on the ground. I meet a lot of analysts like Hardik, Jay, and what I try and do is try and understand what's happening. So just I recently got to know that what China's government does. So for example, if India is exporting a particular manufactured product, an engineering product, to US or Europe, at the max, because we don't have a lot of government backing and government support, at the max we can give 100 days of credit, not beyond that. And this is, I'm talking of a company which is coming out with an IPO, it will open in a couple of days, Unimed. The management told me that they are into such high precision engineering aero tools that despite having almost near monopolistic business, because there are only 4 or 5 players, there are some small Chinese players who are giving them competition not in terms of the quality of the product, but in terms of the credit days. And when they interacted with those Chinese peers, they said our government supports us and gives us help so that we can give additional 50 days of credit to our customers. So we are put on pressure that we want to do business with you. You are a good company, your quality is good, your engineering precision is good, your R&D is good. But if Chinese can give us 150 days, why are you giving us 100 days? And that is where I think to upscale our manufacturing, it will take a lot of government support because we are competing against China. And again, coming back to the fact where y'all will be involved is in the fact the tax base to GDP has to go up, without which all this support is not going to be possible. And see, another thing, as you all logically know, as and when the economy size grows, you will see relative reduction in the socialistic schemes, right? Because when everyone progresses, the government's generous dole out of the socialistic schemes which are happening right now should over time reduce. And that is also hope, and which should be a productive spend towards manufacturing. And see, I think if you look into other economies like Vietnam, Philippines, all will grow, but they'll grow at 5%. This is India's biggest advantage. What gives India a clear demographic edge? And see, it has not only happened with India. Why I'm trying to give you this conviction that, it's not only going to be with India, it's like you've seen what has happened in US, you've seen what's happened in Japan, you've seen what's happened in China. They also had at one point in time the demographic advantage where they had a lot number of working age population. And they've seen unprecedented boom in terms of whether it's the stock market, whether in terms of the economic growth for the next 20 years. India is also going to experience the same. There's no doubt about it. And this is where India outshines. 28 years is the median age, which is only behind that of Africa. And I think at this juncture, we are far ahead in a lot of things vis-a-vis Africa, right? China is aging faster, thanks to the fact that their government adopted this one-child policy, which did a lot of damage to China's demographics. India being a democratic country, we have not tinkered with all that, so we have this inherent advantage. You see, almost 90 crore Indians are under the age of 35. Yes, I think to be a devil's advocate, one will say that there is a lot of unemployed youth. But I think which country has so much of youth? And youth, in a growing country like India, there have been a lot of jobs created. And I'll show you some slides where only startups have landed up creating multiple jobs. So if you see, I think in all aspects, whether it is formally educated graduates, increasing urbanization, young student population under 18, 25% of Indians are under 18. This is, I think, a fantastic data. And why this is important? Because this is the workforce which will be working hard, spending more, and all of us here will allude to the fact that what our grandfathers spent on themselves vis-a-vis what our parents have spent, we are going to spend more. And we know for the fact that our next generation is going to spend a lot more. My 10-year-old son, he started playing table tennis. I just bought him a 800 rupee racket. And after 2 months, he's been doing well, touch wood. He's saying, Papa, peru 4,000 no ek racket che, Euro XX. I'm like, 4,000 no racket? And had I told this to my dad back in my days, he would have given me a tight slap. I told him no. He's been pestering my wife and he's like after it. And finally I have to kind of bow down and today I'll have to buy it for him. So this is what's happening, people want good stuff. By 2030, 1 in every 4 workers will be Indian. This is the world statistics. I think that's the advantage we have. Did you all know that out of the population of 1.53 billion, 1.3 billion people use internet? And this is, I think, revolutionized the entire economy and the way we are doing things. I think DMart is having a hard time. So DMart con call, they did allude to the fact that, quick commerce is dampening our value strategy. By value strategy, mean the big discounts that you get otherwise in DMart, right? Now, even the quick commerce guys are giving decent discounts and people forget the discount. We're getting this convenience of getting the product in 10 minutes, right? Why should we go to DMart, park our cars, stay in the line and spend that time? We can enjoy our family time instead of that, right? So that is what is happening. These are the type of companies. I think I need not talk more about these, lot of startups which are now unicorns. A lot of them are already listed in the stock markets. Does anyone know what is Zomato's market cap? Fantastic. See, everyone knows Zomato's market cap, not trend. That is what's happening. So I think fantastic run. And recently, despite having a 10,000 crore balance sheet cash kitty in Zomato, they raised successfully 8,500 crores. So we were a little afraid, why he had to do that. And obviously the answer is that a lot of other companies are entering this quick commerce. It is still a hugely under-penetrated market. And so many companies coming, they will need war chest. And at the end of the day, the person having the highest cash and the survival is going to survive, right? So many different sectors, a lot of these guys are creating a lot of jobs. Make in India, I think that is also something which is going to play a very important role. And if you see what is targeted is by 2034, almost 24% of our manufacturing is going to get contributed to the gross value add of the GDP component, right? So that is going to be a huge, huge number, 1.5 trillion. So India is certainly, in the next 10 years, there's no doubt, even at a very conservative 6% annualized compounded real GDP growth, adding a 5% inflation, we are going to be a $10 trillion economy by 2034. Nothing's going to stop us, right? So manufacturing is going to hugely contribute to this, and services certainly is going to grow better. What is the government doing to try and incentivize, right? So we are seeing PLI scheme that has been working. I'll show you some data, and a lot of companies that we talk to, right, they are taking advantage of this scheme. And this is where I think India is trying to incentivize its manufacturing vis-a-vis the Chinese model of subsidizing everything, right? So let us see how well they tweak. And of course, the government is also learning. They also admit their mistakes, and they also need to change a lot of things. But this is something which has really helped. If you guys recollect, there was a corporate tax reduction in India, right? And also there was an incentive of 15% tax for a new manufacturing. So a lot of these companies which are coming out with IPO, a lot of these companies who are expanding their manufacturing base, especially the greenfield expansion, they are floating in, subsidiaries. The reason being they want to take advantage of this 15%. So if you see consumption, you see US economy, 69% of US economy is based out of consumption. India is very healthy at 60%. Why this is a better model vis-a-vis that of China? China depends a lot on public investment. It's a very public investment heavy model. Recently, a lot of Chinese government money has gone to bail out the real estate, people. What has happened in China, and somebody was talking about gold, a very smart person who tracks gold very well. He said that gold is going to have a boom over the next 2 years. And one simple reason is what? Chinese consumer buying. What has happened to the Chinese consumer? We are so blessed that we are in a country like India, not like China, despite China being the world's second largest economy, a $19 trillion economy. Chinese investors have not got any returns in the last 10 years. But does it mean that they didn't get returns before that? In fact, before the last 10 years, out of the last 30 years, the first 20 years, Chinese stock markets had an unprecedented boom. Right? So they have made money, and now it's kind of saturated. And of course, China being a communistic centered government, that is not helping the stock markets. And the ROEs are also a lot lower than ours, right? So if you see, India is better place. And currently, Chinese people didn't make money in the stock market. They didn't make money in the property market because they had bet hugely on the property sector because that was the only sector they thought they can make money out of. That is the languishing. So now what is the option they have? Their halat in their FD is also like ours. 7% is not digestible to us. And for them, 4% or 3%, whatever they have, it's not digestible to them. So now they have started to buy gold. If you see where all PLI schemes are taking place, semiconductor and display ecosystem. Very recently, I was in Chennai and got this fantastic opportunity to meet Mr. M.M. Murugapan. He is basically the chairman of Murugapan Group and also heads CG Power. It's one of the listed companies. And that company has committed around 7,500 crores in semiconductor. And the way he praised the government in terms of how aggressively the government wants these companies, not only him, even Tata's have committed, Micron has committed. I think the way the government is aggressively betting on this opportunity is praiseworthy. And that is where I think if you see the allocation of PLF, almost 28% goes here. Mobile manufacturing, no doubt, we are still not the best in terms of mobile manufacturing. Why? Because we are more or less still assembling the mobiles. Ideally, we would prefer to have all the supply chain done, inculcated within India. But I think this is a good beginning. It's still better than importing the entire built mobile from outside, right? So there is certainly a start. You talk to a lot of automobile companies in terms of the battery technology, advanced cell, a lot of things are happening. A lot of pharma companies for the API, intermediate plants, they're putting up a lot of capacities using the PLI scheme. Food processing is a big thing, textile, drugs. So a lot of sectors, specialty steel, a lot of companies are putting up plants using the PLI scheme. But this will certainly expand, and this is where we feel, I think India definitely will do well in manufacturing. India's labor productivity has improved, and I think there was a point in time when people used to praise Chinese labor. A lot of the companies that we talk to who do visit China have told us that one issue in China is the labor cost. Currently, on an average, Chinese labor cost is 4 times that of India. So this is one arbitrage that India can have over Chinese manufacturing. But no doubt, in terms of productivity, a Chinese laborer is currently 4 times more productive than the Indian laborer. And that is where I think the government will have to play a very vital role in a very, very small beginning by the internship program. But I think the Indian corporate sector who have benefited from the lower tax rates will also have to spend a lot on skill development and training. Very few companies, and only the large companies, are spending money on skill development. But if that improves, I think we will do very well because we are already lower in terms of the cost. So if you see labor productivity, India is at par with the best in the world. Again, in terms of power cost, I think India still has a long way to go. We are currently at 6 rupees in terms of per kilowatt hour. Why President Trump, emphasized on having that US should not be importing energy. Rather, US having all the hydrocarbon resources within should be doing fracking, should be removing a lot of oil. Because he understands one thing, a lot of his policies are going to be inflationary in nature because of the tariff war. So how we can give relief to the US manufacturing or the US consumers is by trying to lower the cost of energy. And India has a chance to lower its cost of energy thanks to the fact that there's humongous investments taking place in renewable. And renewable, and trust me, a lot of companies in the stock market which are listed in the renewable space, if you were to just remove the government help, I think a lot of these companies will start bleeding and making losses, right? So Indian government is certainly supporting a lot of green revolution that is taking place. A lot of companies are focusing on decarbonization and going ahead, keeping fingers crossed, whatever energy we adopt. But if green hydrogen were to succeed, and if as per the acclaimed $2, if it is going to happen, then I think we'll be reducing the import of hydrocarbon. That is going to be a big thing. And again, when I was in Chennai, met a lot of startups who are doing a lot of work in battery storage technology. And I think it's amazing to see that India, a lot of these startups have also applied for a lot of patents and they've successfully gotten them. And I think things are happening. So again, as I mentioned about the tax rate, we are at an advantage. Power cost, with so much of power capacities coming, should reduce over time. It used to take almost 9 crore rupees to do 1 megawatt of solar capacity or a windmill. Currently, if you see, despite so much of inflation in terms of the commodity prices, currently it takes around 3.8 crore rupees per megawatt to do a solar capacity or a windmill capacity. Windmill would be around 4.5. So things are doing good in that direction. If you see a lot of leading global manufacturers, I'm not talking of the listed space, a lot of companies which are not listed are committing huge capital in India. And see, this is not only because of the fact that, they want to antagonize China. After COVID, what happened was China intentionally disrupted the supply chain of the world because maybe they wanted to give a lot of inflation to US and teach US a lesson. So I think what a lot of countries in US and Europe realized that despite the fact that China is still going to remain the leader in terms of manufacturing, nothing can disrupt that at least for the next 10, 15 years, but we will need alternate supply chains. So around 5 years ago, when we were meeting a lot of chemical companies because chemical sector was in the flavor, at that point in time, I was astonished to understand that Chinese exports in chemical is almost 25% of the world contribution. Vis-a-vis at that juncture, India's contribution to the entire world chemical market in terms of the export was only 2.4%, which a lot of companies, if they had stuck to their capex plans of investing almost 80,000 crores over the next 5 years, we would have touched bare minimum 4 or 4.5%. But now I think we are seeing what's happening. A lot of these Chinese chemical companies, because so far they were not concerned about profitability or return ratios, they were getting subsidized by the government, and now a lot of government money is going into the other avenues. A lot of the plants are getting shut, and Indian companies are trying to take benefit out of it. Still, they've been very competitive, but a lot of companies like GE, Apple, Micron, First Solar, Boeing, all have committed huge capital in the country. And they're doing this not because they're assured of India being a very price competitive market, but they're assured of an alternate supply chain. So this has worked to advantage. We had visited Hyundai's plant during the IPO, and putting up a decent capex in Pune. So Pune, they had acquired GM's plant. So over there, they're going to up their currently car producing capacity by almost 30% over the next 4 years. Carrier, which is into air conditions, Toyota, Daikin, all these companies are putting up a lot of capex. Public infrastructure, this is very important. So we had attended Adani Group's analyst meet at their corporate house, and we were trying to understand what the group is trying to do. If you see, a lot of the group fixed asset creation has hinged around infrastructure related to logistics, right? Whether it is ports, whether it is warehousing, a lot of things that they do is also linked with logistics, right? So what they said is that this huge capital that we are committing is also with the fact that we know that currently India's productivity in terms of logistics cost as a percentage to GDP is extremely high. And the government understands this problem, and that is why they are incentivizing a lot of private investments happening in the port sector as well. Not only Adani Port, but if you look at JSW Infra, you look at some other privately run ports, they have been building capacity at a lot faster pace as compared to some of the old traditional government run ports. So you see a lot of capex is happening in ports. Railways, we know that a lot of capex is happening, road and highways, airports. So I think this infra spend, the number I think all of you all would be aware of is around 11 lakh crore. Unfortunately, due to elections, I think the first half the spend was very tepid. So now I think the government will have to spend additional 1.5 lakh crore in the second half budgeted to match up with the numbers. And I doubt they'll be able to achieve that. But I think this trend has picked up. There was almost a 4-5 period lull where the infra capex from the government's kitty was not going up beyond 4.5 to 5 lakh crore. Now that run rate has touched at least 10 lakh crore, and that is a huge amount. In fact, when we talked to L&T, they said very few companies in the country have the capability of taking orders of 2 times beyond what they already have. And L&T as the largest infra company currently has an order book of 5 lakh crore, and the visibility of that order book is in the next 2.5 years. So you can imagine if L&T has such a state, so much of work can come and so much of companies' balance sheet can grow in terms of size. And I think this is what we are targeting. The logistics cost, and that is what the Adani Group CFO said, that our goal is to ensure that the logistics cost goes down from 13% of the GDP to 8% of the GDP by 2030. What it impacts? One, the economy productivity will go up big time. Adani Group or other such groups who are investing, JSW Group are investing big time into such infrastructure, their profitability will increase. Because the volume growth will take place, there will be operating leverage kicking in, and they are betting on that more than the capital cost of investment. Again, I think in terms of exports, this is I think a drag. We are currently doing around $450 billion worth of exports. We need to increase this. No doubt, I think this has not worked well, also because of lack of support from the global economy. The global economy is suggested to grow lower in the next 2-3 years. But still, if India can garner more market share here, even on a conservative basis, by 2030, it is expected that we'll add a lot, and we should be at a 900 billion or a $1 trillion export target. A lot of things are already happening. I think you see we have stop importing toys. In defense, there's a target of $6 billion of export by 2030. So things that we used to import, now we are not only manufacturing in-house, but we are also exporting. Pharma, I think a lot of things are happening. Again, I think in pharma, the recently listed company Sai, when we met the management, they said, I think India should do extremely well, but the place where China competes is the government benefits that they get. So that is where I think those companies tend to do better. But in fact, that company told us that 8 contracts which were going to the Chinese CDMO players came to us because of our better effectiveness and productivity. So these things are happening, and I would honestly, with all due respect to the government, but I would not trust blindly what government is saying. But I would go by a lot of these private company managements who talk about what is happening on the ground, and that is what you guys should do. Just don't read the newspapers and trust everything. When you do these Cuttlebug checks, you'll get to know a lot and you'll build more conviction. So semiconductor, we talked of, a lot of things are happening. Gujarat, I think, is a hub. And I think one interesting company that we track, Linde India, I think we try to interact with the management, and even in the annual report they mentioned that traditionally it used to be an industrial gas supplier to the steel industry. But now with India's manufacturing prowess, a lot of these high purity gases are going to be produced and supplied. And the reason why we like that company is because for them the raw material is industrial air, is atmospheric air, and they just have to use electricity to kind of break up the molecules and supply different gases. So even they are saying, and in fact Linde had a capacity capacity of around 3,000 tons per day in terms of the air separator unit capacity. They're doubling that in the next 2 years. A lot of these multinational companies who are very docile in the Indian market, now they're talking of huge expansion plans. Goes to show things are happening on the ground. Defense, I mentioned, there's a huge target for not only domestic, but exports. Today, it's in the news that for the Vajra guns, L&T has received an order of 7,500 crores. This is huge. 7,500 crores is huge for a defense contract. I was in a BNK conference, and over there, I think L&T's defense strategist had come. He explained to us that for how many use cases of defense production, L&T is already approved. Not only L&T, a lot of companies like BEL, HAL, a lot of these companies are already approved. They just need the orders and they will start manufacturing it. And I think one thing that I'm hoping for, which should help, is the tech transfer. Hoping for the fact with better friendship with Donald Trump, I think if India gets the benefit of tech transfer from US, which has not happened so far, I think it will be a huge boost to our manufacturing. Software, I think we are doing very good. A lot of these IT companies are doing some capex in generative AI. A lot of companies are already using generative AI. And I think India is expected to touch $500 billion in software revenue. So the services pie that I talked of, touching 3.6, I think software will play a very important role in that. Coming to the stock markets, now I think it's the time to wake up. The reason why the first half was more about the longevity, so it gives you a lot of conviction of what to do and how long you should hold on to your portfolios. So what has happened since COVID, Indian markets have had a fantastic run. And I believe a lot of young guns who are part of the market currently have witnessed only these last 4 years, right? So what has happened is that a lot of us have not seen what is bear market. Because last 4 years, in terms of statistics, if I were to give, it was only until the last 10% drop that we had in all the indices. Prior to that, for 55 months, we didn't have a drop which was bigger than 5%. So markets were that resilient, right? And I'll give you the data also why it was so resilient. Thanks to the fact that the earnings also grew, because I think as we all know, the stock markets are slave to the earnings. They are slave to nothing else but slave to the earnings. And historically, for the last 10, 20, 15 years, not only in India, but any country you see where the stock markets have boomed, it is very easy to pencil in what will be your stock market returns in terms of indices. It's exactly the same as your nominal GDP growth. If your nominal GDP growth for the next 20 years is going to grow at 10, 12% compounded, that is what you're going to get at an indices level. And the reason why we invest in active funds and mutual funds, PMSs, AIF, is to get 200 to 300 basis points higher than that. So I think these are one of the finest returns you can talk of in terms of stock markets that only India can offer at this juncture. See the resilience of the Indian stock markets. I think we get very perturbed with a lot of news, the WhatsApp encyclopedia and a lot of such things. You see, I think despite all the chatter, whether it is related to Fed, whether it is related to S&P doing something, BJP losing majority, and this is very recent data, right, from Jan till December, right? Fed, talked of cutting the rates. A lot of people thought, Fed agar rate cut kar raha hai, to market badhega. And see what happened. We had a correction, right? Historically, whenever Fed has raised the rates, Indian markets or the US markets have done better, right? It's always the contra. Nifty had peaked, FI selling. So a lot of people are worrying that, oh my God, FIs are pulling out everything and going out. I think I'm sure you all know the data. Does anyone know what is the amount of holding of FIs in the Indian country? Very good. Yeah, it's around, it's more than 900. It's between 900 and 1 trillion looking into the current recent correction. Out of that, if they are selling 12 billion or 15 billion dollar worth of stock, हम लोग हमारे portfolio में इतना churn नहीं करते क्या? What is the percentage? They are managing 1 trillion dollars in the Indian markets, and they deserve to kind of have a rejig of 10% of their portfolio. We will also want to change from mid caps, small caps to large caps. We do such things. No? They are doing the same thing. But see the beauty of the resilience of the Indian market. Sorry, you had said?
Yeah, they are doing at the India level, region level. Right?
Yeah.
First thing that they are doing at the region level. Second thing, what they are doing that the valuation right now in India and in broader market is not as cheap as compared to other market offers. And important thing,
India is very expensive for 1 year, but India is the cheapest market in the world till 2030.
Now we are talking today. So now if we have extra money to put on, right, or we will our portfolio, right? Then we have better markets available. Say China. China, the top happened in 2007. After 7, China market.
Sir, I'll give you one data with all due respect. And Mr. Nilesh Shah from Kotak, I think he is more trustworthy than I am. He has given a data for the last 20 years. Indian stock markets, despite being expensive, I'll show you one slide where India has always been expensive, has delivered far better defty returns in terms of dollar than that of China. So I have a guaranteed market which has delivered in the past, is looking forward to deliver in future. And can you trust the Chinese government? How much of your portfolio is in Chinese ETF? You can invest in Chinese ETF. Will you trust China?
That is why people are afraid to invest in China.
Yes, exactly. Exactly. You answered it yourself. Thank you. So if you look, we have been extremely resilient despite a lot of global uncertainties. Now this is the point I'm talking of. This data goes right back in calendar year 2014. What was India's P/B? 20. Tell me if the P/B is ever gone below 18. It would have gone during COVID because that was a one-time event. But if you see on a closing basis, thanks to the fact that we are growing in terms of the earnings, thanks to the fact that our ROE has always been, what is China's ROE? 7-8%. And that is what we care for. We are never gone, despite our nominal GDP growing at only a 10-11% compounded, our stock market Nifty company ROEs have been upwards of average 13% growth. And this is the reason why India stays expensive and probably will stay further expensive. So always consider this. Don't get perturbed with this short-term FI selling. What is more important is we are one of the cheapest market in the world 5 years down the line. A lot of companies whose reports come out, which is at times obnoxious, will talk of FY27 based earnings, FY29 based earnings. But I think India is the land of opportunity. We should not be worried about what FIs are doing. In fact, I would want them to sell more, because generally it's said that, if they are selling, it has been very good that the retail Indians have bought in the last 4 years. Otherwise, if they have also been buying, we would have been purchasing very expensive equity. What are the risks? I think we always talk of the positives, but these are the risks. I think hard landing of US economy. So I think one concern is hard landing of US economy. I think what one understands of US President Donald Trump, he does not care in terms of what happens immediately to his economy. He seems to be very confident that with all the steps that he'll be taking over the longer horizon, the US economy's productivity will again improve and come back down. So if you see, similar thing happened in 2014 when there was a major change of government. A lot of policy actions were taken, a lot of steps were taken, a lot of steps which were taken were not immediately very productive to the economy, but in the long run it was. So I think one is expecting, and I got a chance to meet Morgan Stanley India head, Mr. Ridham Desai, and he felt that next year is going to be very difficult for the US markets. And historically we know that whenever the US markets sneeze, we do tend to catch cold. So we are expecting next year to be little volatile, which is justified. And that is where I think we as investors can get the best chance. Monsoon is something which we are still dependent on. Currently the reservoir levels are reasonably good. The Kharif crop output was good. But next year again, if the monsoon is not very favorable, I think that could also be a risk. Geopolitical tension escalation, right? Despite so many wars, I think a lot of you will attribute to the fact that previously, whenever such global geopolitical problems or the oil spiking used to take place, Indian stock markets used to correct by 15-16%. As a matter of fact, I don't know how many of you all know, in 2021 was one of the toughest years for equity globally. The US markets in terms of NASDAQ had corrected by more than 20%. The European markets had corrected by more than 22%. Guess what? In such a scenario, Indian stock markets had corrected by 18%. This has never ever happened in the past where Indian markets have corrected, and despite being expensive, Indian markets corrected relatively less to the global peers. This is, I think, a very resilient sign. So geopolitical tensions is something that we'll have to take care of. A lot of global supply chain gets impacted. A lot of companies who report results mention the fact that if there is anything in the Red Sea, something happening with the freight, it does have an impact. Again, inflation. I think by grace of God, finally inflation data has been going down. US core inflation 3 years back was at 9%. Currently, that is at 3%. On a historical basis, 3% core inflation in US is still high. We know for the fact what is happening with our vegetable prices. So inflation is a very important thing, but I think the policy that the Indian government has adopted and RBI has adopted is inflation targeting. And I think a lot of people are worrying about the currency depreciation, which has touched 85. But thanks to the fact that inflation has been targeted, the relative rate of depreciation, thanks to the differential of the inflation between US and India, is going to be lower. And a lot of people might not know that recently Indian currency is depreciated by 2.4%, but the Chinese currency is depreciated by 2.8%. And there are some other currencies which are depreciated a lot faster. Commodity prices, I think this is also very important. India is unfortunately net importer of a lot of commodities. So I think it's very important that domestically we increase our mining output and increase, I think, the production of that. Despite all this goodness that we are talking of, what is India's contribution to the world market cap? It's meager 4.3%. The average used to be around 2.7%. And anybody knows what is the US market cap currently? 63 trillion USD. India is at 5.3 trillion. Right? Japan is slightly higher than us, thanks to the fact that they recently had a rally. Anybody guesses for what is Chinese stock market cap at? $10.8 trillion. Right? So I think there is a good visibility that India's market cap over longer horizon in the next 6-7 years should be at least at 10 trillion, which should create a lot of wealth. So incrementally, I think we are adding another similar stock market which is already there in India over the next 6-7 years. So a lot of wealth to be created for us. As I mentioned, if you see different countries, we have already beaten Taiwan, France, UK, Canada, India and Hong Kong are, I think, almost at par. Japan is at 6.5 trillion. As I mentioned, what is China at? And US is 63. Now, I think this is one of the reasons why Indian markets have become less volatile. Honestly, tell me, you guys, there was a phase in India when the stock markets used to correct by 15%. What do we used to do? Right? You used to sell. We used to really panic. Thanks to the fact and thanks to we all, there is so much stability now because of a lot of DI flows that now that volatility is reduced. And thanks to the fact that volatility is reduced, don't you all feel the Indian retail investors become very mature? In fact, we run this mutual fund business where we used to initially call whenever the market used to get down by 10% to our clients that let's top up your SIPs, let's top up your funds. Now we don't have to call. Even on a 5% dip, they just call that I have spare money, you please top up. This is the maturity, and thanks to the fact that we haven't seen a major crash because of a lot of domestic liquidity. So we were just discussing, what sort of liquidity the Indian mutual funds are sitting at. So just to give you some data, currently the Indian mutual fund industry is around 68 lakh crore size, in terms of size, right? Out of that, the equity mutual funds are at around 44 lakh crore. And out of that 44 lakh crore, a lot of these fund houses on an average are sitting at 5 to 7% of their AUM in cash, right? So you can imagine there's almost 4-5 lakh crore in the sideline, which is just sitting to be invested as mandated in the equity stock markets. Not only that, there are a lot of these hybrid schemes, multi-asset, balance advantage funds, who up their debt quotient or arbitrage quotient as and when the equity markets are expensive. And then they will switch when the markets fall. So all that money is going to come. What about EPFO? A co-relevance in terms of how the 401k in US and how the SIP revolution in India is related. Does anyone know when did USA mandated the 401k investments to be allowed to be invested in the stock market? Previously, 401k was always allowed to be invested only in the debt market. And there was a point in time like how in our EPFO, the government has allowed, if I'm not wrong, the limit is 15% to be invested in the stock market. What has happened? Same way in US, when the US government allowed the 401k savings to be invested in the stock markets, they had an unprecedented 20-year stock market boom. Of course, in that 20 years, you had falls of 10%, 15%, 20%, which is also going to happen in India, right? We are not God. But India is also facing the same thing with a lot of government pension and a lot of such money from insurance, savings from ours, SIP money is coming. So just to give you the data, how many unique investor accounts in mutual fund? 5.18. By unique, what I mean is I might have with one single PAN of mine multiple investments, right? So I cannot be called as a multiple investor. A unique PAN investor, India has only 5.18, which has grown well, almost 25%. SIP AUM, as we all know, it's at 25,000 crore right now, has been pretty resilient despite last 6 months. Generally a lot of people have mobile apps. We don't prefer to give that to our clients unless they ask for, because that continuous seeing hampers your investment. Last 6 months, I think they're not seeing good returns, which was not the case previous 6 months and 6 months prior to that. Yet, I think people are still resilient. And unfortunately, what happens is, a lot of people who want to buy a house or who speculate in the derivative market, the only avenue they get to monetize their funds are from the SIP. There's no other asset class which gives such classy exits. So if you see in terms of total SIP accounts, there are 10.23 crore. And I think this is the visibility. We track a lot of these stock market related companies like Depositories, CDSL, NSE as an exchange, CAMS, K-Fintech. All these are like market infrastructure players, who create the ecosystem for all this. And I think in terms of the numbers that they're talking of, they have already built capabilities in terms of the IT services to handle 3 times the size that we are currently having. Goes to show that how much upbeat they are in terms of what number of growth we are going to witness over the next 10-15 years. So I think this is something very good. And again, if you check in terms of discontinued SIPs, 25,000 crore is the gross SIP number. Despite the discontinuation, the net SIP number is also very healthy. This is, I think, a beautiful thing happening. How many people out here, except for people who are upwards of 50 years, invest in bank FDs? Anybody above 50 would be investing? Yes, that is understandable. Anybody else? So I think very few people are raising hands. This is the data which proves that. What's been happening is that mutual fund AUM as a percentage to bank deposit has gone up to 31%. In March 2014, it used to be 10%. And even currently, the banks are complaining because of mutual fund as an industry, we are having a very difficult time to garner our liability franchisee and deposit base. So I think that's a big problem, but let's see what government does. So banks are raising capital via tier 2 bonds, via tier 1 bonds and things like that. So this is a change. And currently, if you talk of some of my clients who are elderly, upwards of 50 years of age, having say 2-3 crores lying in the bank fixed deposit, I think what we are pitching to them is a SWP plan. In fact, we have done a lot of study of 10 years, 15 years, 20 years and run calculators that if you were to take a 6% withdrawal on an SWP plan in a balanced fund or a balanced hybrid fund like Balanced Advantage Fund or a multi-asset fund, you can take out 6% and you can also withdraw on a monthly basis 0.5%. Over 10 years, your principal increases by 2.3 times. A bank FD will not allow your principal to go up. And the net IRR of this product comes to anywhere on a conservative basis to 11% to 13%. And trust me, I'm not talking of the last 4 years of stock market boom. You can take previous 10 years where the stock markets didn't do great. The average rate of return of Nifty at that juncture for 10 years was 8.2%. Despite that scenario, these products have delivered an IRR of 10%. You withdraw 6% upfronted, yet you are able to increase your principal. And about the taxation, you guys know better how the equity taxation fares. So I think a lot of senior citizens have started adopting this, ditching their FDs, ditching their corporate FDs and going into such products. No doubt, we have to tell them honestly that there is a possibility that after 3 years or 4 years, if you were to look at your portfolio, your principal might be down. But over a 7-year and plus period, I think you'll see your principal always being up. And this also includes a point in time. We also done a study 2 years before COVID and continuing with that portfolio 2 years after COVID. Despite the COVID blip and still withdrawing that 6%, the systematic withdrawal plan has worked very well. Again, I think what has happened is, and I think this is not a great news to share, but the way Indians are getting aggressive towards equity because we haven't seen a major correction or major crisis, what has been happening is people are not preferring debt funds. If you see previously, the equity AUM was very tiny as compared to what the debt or liquid AUM was. Now you are seeing that this is, I think, the chart which shows equity. I think equity is now dominating factor, which was not in the case. And this will continuously increase because I'm sure none of you all here do a debt SIP. You all do equity SIP, right? So equity pie is increasing by the day. And I think we meet a lot of fund managers. So a couple of weeks back, Mr. Sankar S. Narain was here in Ahmedabad. So we got a good chance to talk one-on-one with him. We said, sir, what is your biggest challenge? So he said, my biggest challenge is that we are getting so much of flows. And sometimes I think I have a fight with my top management that I am telling them that in some of the schemes, we should stop the flows. We should tell that we are not interested now to take money. And we'll take the money after a certain stage. Because we are getting so much of money, we are at times forced to deploy where we know that going ahead, there might be some correction because of the FI selling or things like that, volatility, but still we have to stay in a lot of cash. And investors of ours don't give us money to stay in cash. They give us money to be deployed. So this is one challenge, which is a good challenge, but I think a lot of liquidity again shows that. DIs dominate they are dominating the flows. And that is the reason why FIs are happy to sell in India. Before this scenario, I think when FIs used to sell the quantum that we just talked about, $12-13 billion, Indian stock markets would have been down by 15-20%. This is the impact cost that FIs used to face in Indian market, which now they are not facing. What does this prove? This proves, and recently you all must be aware of the fact that India's weightage in Morgan Stanley Emerging Market Index has gone up to as high as 22%. So it used to be 7%. During COVID, it has gone to 22%. So that is that the foreign capital has to come back into India and invest as and when our markets are growing. And what are we guys doing? We are accumulating such units at a lower cost. So please don't worry about the trail valuations. Do your SIPs, do your investments. 10 years down the line, everything's going to look better, right? So don't try to time the market. Even Warren Buffett cannot do that. We are no one in front of him. I think this is something that I would like to really focus on. This is entirely market psyche. What is happening, right? And I know a lot of clients, whom despite dissuading them not to do derivatives, because I think it is SEBI, thanks to the fact that they are regulating the industry very well. They're given a data that 96% of the derivative players in Indian markets lose money. And the quantum of losses that they have made is to the tune of 1.8 lakh crore. That is huge. I mean, what has been happening is that RBI also talked about the fact that they are a little afraid of a lot of unsecured loan that is taking place. And a lot of that unsecured loan, and these days I think we are flooded with messages that you're eligible for 5 lakh loan, 10 lakh loan, whatever it may be. A lot of that went into trying to make easy money by derivatives. And that has been lost. I know some clients who even broke their SIPs, which were yielding XIRs of 18-20%. Just to prepay the loss or repay the loss of the derivatives market. So that is something which is very dangerous, we need to stay away with. Initially, there's always a disbelief. Whenever the markets recover, there's a hope. Then there is optimism that this rally is really real. Then there is a point in time where this is the time to get fully invested. A lot of people wait on the sideline waiting for the markets to correct. The markets will not oblige. Then when you put your money, the markets will fall, right? That is what happens. Then there is thrill, when you are right. A lot of people, I see in this industry, I've spent almost 22 years. And when I was in US, I had invested 20,000 my own dollars, earned from internships, into the US stock markets. And this is a point in time which is like 6 months before the Lehman Brothers crisis. And I had bought the best of the best companies, General Electric, Honeywell, Dow, DuPont, Wells Fargo, JP Morgan Chase, things like that. I called up my dad and just bragged to him that, what is India? India is nothing. I have the best companies in the world. My GE is 10 times the size of your Reliance, right? After that, in the next 6 months, that portfolio was down by 65%. And I was really depressed that what sort of business we are into. How can such a prestigious portfolio be down by 65%? That was a great learning lesson, and I think I've gone through this emotion, and that's why I'd like to share. I called up my dad and told him that, should I just liquidate everything, that $8,000, whatever is remaining, and put it into a bank CD there. And in US, the bank CD, which is the FD, was yielding 1% per annum. So my dad said that is a terrible mistake, just don't do that. I was, I think, 21 at that juncture, 22. I told him, what should I do? Should I give you the money? Can you manage it better for me? He's like, no, what stocks you have? So I told him the names. And then he told me that, what are you saving on a monthly basis? So I said around $2,000. Like, put your entire $2,000 into these stocks. So I'm like, Dad, are you sure? My GE has gone down from $32 to $8. And you want me to put money at $8 also? He said, please do that. I'm like, what if, this money also gets eroded? And then you always have India to fall back on, right? So then I did that, and luckily after 3-4 years, I exited that portfolio with a 22% CAGR. So that was a great learning. So you will go through these emotions. There'll be euphoria. A lot of people currently feel, maybe I think until the last 2 months ago, that I am a stock market genius. Right? Everyone feels that, right? I'm doing well. Whatever stocks I pick, I'm making good money in the IPO. Please don't get carried away. I really want to talk of the IPO as well. Just 2 days back, I met this Italian multinational company which is coming out with an IPO. And unfortunately, India has become a milking ground for everyone to come and milk Indian investors. That is what we also discuss with a lot of mutual fund managers, that why you compel to put your money in these IPOs, when you know the valuations are exorbitant. So like Hyundai, can you believe that the Hyundai parent, global parent, which owns both Hyundai India and Hyundai Kia, right, the Kia Motors, and the other assets world over, is available at a trail P of 5 in South Korea. Right? And in India, what are they charging? The valuation. India's growth, सब सही है, लेकिन growth ऐसा भी, मतलब आप ऐसा pencil मत करो कि कुछ बचे ही नहीं investors के लिए, right? And then you saw what happened with such a massive IPO. I thought that such a massive IPO not doing well, sucking out almost 27,000 crore out of our investors' kitty, is going to impact the market. There's no stopping, right? Not only MNC, sir, even the Indian promoters. So I know some fund guys who go to the promoters, tell them that, boss, you want to raise capital. बोले हाँ क्यों नहीं? तो क्या कितना करना है? 200 करोड़? सर 400 करोड़ कर दीजिए ना, इन्वेस्टर दे रहे पैसा, तो मैं करूँगा क्या 400 करोड़ का? अरे फ्यूचर में कैपेक्स करेंगे, जो भी करना है करेंगे. So this Italian company that I'm talking of, who is coming out with an IPO, it's an MNC having 2 plants in India, one in Pune. So I think what the management, so even the Italian guys, the main owner had also come here, flown and come here, because he is getting huge amount of money from us. So they are doing a 1250 crore IPO. It's a complete OFS. Yeah, you're right. Yeah. So for compliance, I can't use names. But so basically, they're doing a 1250 crore IPO. 2 things that I asked the management. One was you have a 200 crore of debt, which includes the working capital debt and long-term debt of 100 crores. Why aren't you at all bothered? You are getting such crazy valuations from the Indian stock markets. You are coming out as an auto ancillary with a trail PE multiple of 55, and you are not even bothered to get some money into the company. ऐसा तो प्रमोटर क्या थोड़ी कंगाल है कि पूरा 1250 उसको ही ले जाना इटली में वापस, राइट? तो बोले कि नहीं, हमारा कैश फ्लो अच्छा है, वी कैन मैनेज. अरे मैनेज ठीक है, बट गिव सम बेनिफिट टू द इंडियन इन्वेस्टर्स. सेकेंड थिंग, their plants are currently operating at a capacity utilization of 85%, right? So they are definitely headed for a capex. नया 50 करोड़ 100 करोड़ डालना पड़ेगा. अरे यार तू 300 करोड़ इधर ला देता तो तेरे को कैपेक्स के लिए बैंक के पास जाना नहीं पड़ता. But what the promoter is doing, Indian investors are greedy, they are willing to give everything. थोड़ा ग्रे मार्केट बुलाया, IPO भर गया. So 1250 crore entirely is taking. So please be careful. Don't have this fear of missing out. When your neighbor or your friend tells कि मेरे को विशाल इतना लगा, मेरे को GIA इतना लगा, don't worry. I know some clients, go to that extent because they take LAS and mutual fund debt to apply into IPOs, and they don't get the IPOs. And I'm sure a lot of you will say yes to this. Let's not hide things from ourselves. What they do is, as a revenge, when the IPO gets listed at crazy premium valuations, 30%, 40%, they want to buy that. And sometimes what happens is, for 5 years, you will never make money in those companies. So please don't do such irrational things. I think this is just a feedback I'm sharing as a learning also, and I have also made such mistakes, no denying. So these are the different phases: anxiety, denial, panic. What happens is, after your stock has fallen by 20%, you still always have that hope that it will recover. But then for the 2 years, the stock will not recover, it will time correct. And that is where when you sell, and then the stock starts rallying. It's called suckers rally. Exactly, it's human psychology, right? So yeah, I tell a lot of clients, why try and be an expert stock picker? We have the best fund managers who are delivering such fantastic returns in mutual funds. You do your professional work, you do your stuff, right? Let them do that work. And I think the team that they boast of, none of us can even think of imagining, right? They have 100 analysts tracking companies, tracking data. Yes, 5% here and there, they'll also be making mistakes by putting money in Hyundai type companies, right? But still, at the end of the day, net of your fees, what are they delivering? They're delivering upwards of 15%. Mr. Rakesh Jhunjhunwala himself said कि अगर Indian investor को mutual fund करे या कुछ भी करे, 15% मिलता है तो he is a king. और अगर 18% मिलता है तो he is a super duper king for 20-30 years. And mutual funds have delivered 15% upwards over the last 20 years, and going ahead also they will deliver another 15% over the next 20 years. और क्या चाहिए? See, this is very important. Lot of our individual stock portfolios, and this is one of the learnings I wanted to share, is in mid cap and small cap stocks. They have been very resilient, but if you see the history, see mid cap, small cap, when they've grown in terms of indices, you see 2003 to 2008, there was this rally where small cap indices had gone up by 16 times, mid cap index by 10 times, and large cap by 6.8 times. What happens after that? See the fall. The fall has been brutal. Every time when the small cap, mid cap cycle has been in a euphoria in terms of historical valuations, it always follows with a big fall. So this is where I think it's very important to reallocate and reassign our portfolios, try and eliminate that risk and conserve your capital if at all this were to come true. So I think this is something that I always like and always love to share. What we as human beings focus on, again it's on human psychology. So they say the stock market is like an excitable dog on a very long leash in New York City, darting randomly in every direction. So dog and the owner, when they're walking, we know the owner will walk to his direction. The dog will move in all directions, right? The dog's owner has done the same walk for multiple years. He knows what he has to do. He has done the same walk again and again, right? The dog's owner has done the same walk for years, starting at Columbus Circle through Central Park, ending at Metropolitan Museum. At any one moment, there is no predicting where the dog will lurch at. But in the long run, you know that he's heading northeast to the owner's direction, right? At an average speed of 3 miles per hour, the owner's speed. What is astonishing is that almost all of the market players, big and small, seem to have their eyes on the dog, which is the market, and not on the owner, which is the business. So I think forget valuations, forget things like that. Focus on the owner, focus on the business, stay invested in good companies. That is the only secret of making good money. I'll just conclude. I think reading RHP is a very underrated thing. We try to follow a lot of research reports. If you are really interested in research, don't miss out on reading red herring prospectus. I think they are plethora of data and a lot of data points, not only to think of investing in those companies, but understanding the sector. For example, for me, Keynes Technology as an example, I wanted to understand the EMS business. Reading its RHP gave me so much of insight of what's happening in this industry. So this is something you should do. Please use your mutual fund SIP to save for the retirement and then use that corpus to reverse, which is systematic withdrawal. As I said, don't have FOMO. Please do not leverage against your mutual fund units or against your shares to buy another shares. I think they are weapons of mass destruction, as said by Warren Buffett. Again, needless to say, don't do derivatives. One good thing, if you want to understand how good portfolios are made, read the fact sheets of the mutual fund guys. You'll get to understand how they do portfolio sizing, how they do allocation, how they differentiate in different sectors, which sectors they're betting on, so on and so forth. And I think please be extremely careful of SME IPO. I know we have our investment banker who's part of the committee. He can also help you in that, but be careful. A lot of these companies in the SME IPO are bubble, they are froth, and that's why I think SEBI has now intervened. So you'll have to be very careful here. So this is where I conclude. Thank you very much. Open for any questions you have.
So thank you, Parthiv bhai, for the really insightful session. I think you have touched based on areas where government will be spending, themes, areas, your own psyche, and regarding what extra measures investor has to take care of. If I just have to take one thing from this session, like Parthiv bhai was mentioning regarding the government spending, regarding our spending patterns have changed a lot. So accordingly, business cycles have shortened and businesses have changed themselves. Parthiv bhai mentioned regarding Trent, he was mentioning regarding Zomato. And so if we just have to look at the broader themes, we have to primarily focus on where our incremental spends are happening. Let's say we all are traveling more, so we see the hotel stocks booming. So if we just keep a track on our spends, and incrementally the consumers are just much more becoming experience oriented, which was not the case earlier. So really insightful, really appreciate you sharing the takeaways, and thank you for your detailed insights. Floor is open for questions, guys. So please feel free to ask any questions.
Yes, sir, please.
What is your outlook regarding the market?
Sir, I'll be very honest with you. I have no idea of short term, at least next 1 year. But 5 years, as I said, I'm very, very upbeat. Personally, I believe that thanks to the fact that as and when Mr. President Trump will take office, and looking at his past track record of making a lot of noises, may not necessarily everything percolates into his policy action, but he is somebody who can really include volatility in the market. So you will see huge swings taking place. Personally, if I have to talk and disclose about my own current strategy, I am currently sitting at 15% of my portfolio in cash, right? And I believe that there will be good entry points in the market next year. And I have a philosophy in my mutual fund portfolio: whenever the markets see a drawdown of 10 to 15%, I go all in. I don't care if there's going to be another 5% down. I can't time the market. But historically, whenever I've done that, it has given me better XIRRs vis-a-vis my normal SIP. So that is what I've learned. I'm trying to keep my portfolio very simple, trying to avoid things that I don't understand, trying to come out from things which has given me returns far beyond my expectations, and trying to even cut my losses in companies where I have to admittedly say that I've made mistakes. But I think in the next 6 months, you will get very good entry points. Just in case if you personally feel that the markets are in the short to medium term expensive, I think next 6 months you'll get very good entry points is what my best guess is.
How do you think that de-dollarization can impact our markets? Because as you said, 900 or $1 trillion, they are managing our money. So if they are reversing the trend, or is there any chances that market can give more than 25% correction?
See, one thing what is happening globally is Russia, if you see what happened with Russia, before this war, when Russia had done Crimea, right, US with the SWIFT mechanism blocked, right? So Russia learnt a lesson. So Russia invested a lot in gold and built up its buffer, right? Biden administration, yes, exactly. Biden administration was not as strict as what Trump could be in terms of, India also making noises that we'll eliminate the dollar and we'll directly do currency, right? It's not going to change overnight, trust me. At least when I talk to Ridham Desai, right, I think he's a better authority than a lot of us. He meets the government, he meets international government, he gets all the insights from Morgan Stanley, global insights. He told me it's not going to be easy under Donald Trump. He will not allow the dominance of dollar to decline. As a matter of fact, he will try and give reassurance to a lot of his allies who are converting their dollar reserves into gold, that don't do that. If you are our allies, we are not going to disrupt you. But certainly after 10 years, the dollar's domination is diminishing, and it will diminish. And let's see what happens. It's very tough to predict that. So have some portfolio in gold. Generally, I'm not a big fan of gold, but I think previously they used to say as an allocation, 5% of your portfolio can be in gold. But I think now looking at what's happening in the world global order, 10% allocation would not be a bad idea. Right? Yes, sir.
Two things. One thing is that even Mr. Donald Trump is saying that they are making US models, right? So do you think that it will suit up the inflation in US because the labor is so costly in US, right? And it is difficult for the US also to comply with various regulations, even environmental laws. So whatever is as a politician, he will be doing this blah 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 blah. Just
Exactly.
attractive vote. But practically, it is very difficult for him, to what he says. Even if he does 10%, that it's a very good thing. And also that this global war and all that thing that used to happen, now this will remain control, because right now under Mr. Biden government, they were just spectator, or they were behind the thing. Under Mr. Donald Trump, they will come forefront and they will shut down all those things which residents.
I understand your point, sir. To give you an answer, see, if you see Donald Trump's past track record, he is the type of person who wants the capital cost for businesses low. For that, what he'll have to do is get the interest rates lower. So whosoever he puts in the Fed, he will want them to put the interest rates lower. Can he do that with high inflation? Can he do that? Can he afford a hyperinflation in US? US debt is already $33 trillion. At 4%, US is paying $1.3 trillion every year to just pay the interest. You know what is the US government healthcare cost? Or the defense cost? Defense cost is 800 billion. It is the first time in the history that US defense budget has gone lower than the interest amount outgo. So they do understand that, and I think that is why had a committee which will try and cut a lot of wasteful expenditures happening to the tune of 2.2 trillion. And trust me, all politicians are the same. For elections, will have to be a lot of noises, but looking at the current scenario, because when Donald Trump was previously the president, they didn't have problem of inflation. At that juncture, US CPI was at 0.4, 0.8%. I'm sure he's a pakka businessman. He will definitely want make in America. He will start manufacturing things in America. He'll spend in American infrastructure, which is a good thing, because a lot of the services and a lot of the things that India can also export to build America will also be fruitful. But I think what I like about him is he is more anti-China than he will be anti-India. And India's policy action will play a vital role to decide the way ahead, because if you are US's friend and if you have somebody like Trump who can support you, trust me, a lot of your problems are mitigated. Whether it is the border problems with your neighbors, whether it is China-centric problem, a lot of things can be taken care of. And China is a currency manipulator. China pegged its yuan with the dollar, it never. So recently, if you see, because Chinese capacity utilizations are up and the domestic demand is so low, they want to flood the global market. They depreciated their currency by 2.8%.
That's why the flows are not going permanently to China.
Exactly.
If you see 2007, 2008, then the Hang Seng index high, we still then cross, right? After having a 5-6%.
So, but you have to respect the fact that China is still a $10 trillion stock market. Some flows will go, and if Chinese government shows some policy action change that we are going to be more accommodative to the foreign investors, then China will get deservingly more flows than India, which is nothing wrong. It is part and parcel of how the flows are. But the good news is, in the emerging market basket, India has beaten Taiwan, India has beaten Russia. Of course, Russia is now totally zero. So India, if not the first, it's the second best in terms of deserving the flows whenever these flows come back.
Actually, we are talking a lot of.
Can I allow somebody else also, please? Yeah, sure.
This time things are now different. Elon Musk is now guiding Trump, and I think Trump is now saying he wants to make crypto capital of the world, USA. I have 2 points. This is one point, and secondly that since IPO, their companies are issuing IPOs at a great valuation, but still anchor investors are investing so much of money.
Sir, first point.
Though they are very informed.
ફર્સ્ટ પોઈન્ટ, અહીંયા બેઠા બેઠા તમને ને મને ખાલી આપણે વાર્તા જ કરી શકીએ છીએ. કોણ કોને સલાહ આપે છે, કોણ શું કરવાનું છે, કોઈને કક્કોડો ખબર નથી. જેમ પેલું માર્કેટનું પ્રિડિક્શન છે ને કે કાલે શું થશે, 6 મહિના પછી શું થશે, મારું ગેસ બી તમારા જેવું જ ગેસ છે. એટલે જસ્ટ ફર્ગેટ અબાઉટ ઓલ દેટ. ઇટ ડઝન્ટ હેલ્પ આર ઇન્વેસ્ટ. આ બધું મેં કરી ચૂક્યો છું. મેં જોયું કે એનાથી છે ને મગજ જ બગડે છે, ને જ્યારે રિયલી ઇન્વેસ્ટ કરવાનો ટાઈમ હોય ત્યારે આપણે કરતા નથી. એટલે જસ્ટ પુટ ઇટ એટ બે, રાઈટ. સેકન્ડ પોઈન્ટ રિગાર્ડિંગ ધ એન્કર બુક. સર, એવું નથી કે આઈપીઓની બધી જ કંપની ખરાબ છે. Some of the companies that we track, they are fantastic first-time investment opportunities in the Indian stock market. તમે એમ વિચાર કરો કે ઝોમેટો જેવી કંપની લિસ્ટેડ ના થઈ હોત તો તમને કે મને આપણા પોર્ટફોલિયોના સાઇઝમાં પ્રાઇવેટ ઇક્વિટી દ્વારા ઝોમેટોમાં સ્ટેક મળ્યો હોત? નથી મળતો. મોટા લોકો જ લઈ જાય છે. એ જે પેલા 6 કરોડ બતાવ્યા, 6 કરોડમાં બી ખાલી 5 જ લાખ એવા લોકો છે કે જે લોકોને નાઇકાનો સ્ટેક બિફોર આઈપીઓ ને બધું મળી જતું હોય છે. આપણા નથી મળતું. So Indiana markets, when new companies come, yes, the anchor book is built. Some of the companies have done extremely well. As a matter of fact, આજે IPO boom થયો છે અને જે હવે ફ્રોથ બધો છેલ્લે આવે. છેલ્લા 1 વર્ષ કે 6 મહિનામાં જે તમે જોશો તો આવે. મારે એક CNBC આવાઝમાં માર્કેટ ગુરુકુલમાં એક IPOનો શો હતો. હું જ ચોંકી ગયો ડેટા જોઈને, કારણ કે મારે ત્યાં ડેટા આપવાનો હતો. છેલ્લા 3 વર્ષના જે બી IPO આવ્યા છે, on an average XIRR of that IPO invested companies, તમે IPO ના પ્રાઇઝે ઇન્વેસ્ટ કર્યું હોય તો યુ વિલ બી શોક ટુ નો 33% XIRR છે. એટલે તમે કોઈક આઈપીઓ 2021 જાન્યુઆરીમાં ભર્યો, કોઈક આઈપીઓ માર્ચ 2022માં ભર્યો, એનું તમે ખાલી સમય કરશો ને તો ઇટ ઇઝ ફાર બેટર દેન મ્યુચ્યુઅલ ફંડ્સ, AIF, PMSs, એવરીથિંગ પુટ ટુગેધર. અને એમાં તમારે ફીસ બી આપવાની નથી હોતી. આઈપીઓ ભરવામાં તમે AIF કરો તો AIFમાં 2% ફીસ બી આપવી પડે, આમાં તો ફીસ બી આપવાની નથી. તમે 1 વર્ષ પછી વેચો તો 12.5%, નહીં તો 20%. એટલે આઈપીઓ સારું છે, હું એવું ડિનાય નથી કરતો. અને આઈપીઓ માર્કેટ હેલ્ધી હશે તો જ આપણા કન્ટ્રી માટે સારું છે. કારણ કે બેન્કો સપોઝ વ્યાજદર વધારી દે તો કંપની તો એ જ જોઈએ ને કે મને વેટેડ એવરેજ કોસ્ટ ઓફ કેપિટલ એમાં ઓછું મળે છે. સો આઈપીઓ ઇઝ ડન અ ટ્રમેન્ડસ વર્ક. અને મને તો એવી કંપની ગમે કે જે આઈપીઓના પૈસા પાછા બેલેન્સ શીટમાં લાવે. એટલે હવે જેમ કે ICAI નામને આઈપીઓના મેનેજમેન્ટને મળ્યા તો મેં કીધું યાર કે ઝુંઝુનવાલા સાહેબના આટલા પૈસા બન્યા તો બી કેમ કાઢે? એ કે એમને કાઢવા જ નહોતા, પણ અમારે અમુક સાઇઝનો આઈપીઓ ના કરીએ ને તો એન્કરે ના આવે, મ્યુચ્યુઅલ ફંડ બી ના આવે, અને પછી અમે સ્મોલ કેપ કંપનીઝ રહી જઈએ. એટલે એ લોકોએ અમુક ફ્લોટ આપવો પડે છે. That is it. It seems like, sir, absolutely. If you see since the last 2 quarters, અને આ વર્ષે, અને સાચું કહું, what happens is all we analysts when we pencil the earnings ને એ ખોટા જ પડીએ છીએ. કોઈ બી હોય, રાઈટ? આ વર્ષે 15% ગ્રોથ એક્સપેક્ટેડ હતો, એના બદલે અત્યાર સુધી તો આપણે 6% ઉપર છે. અને 6%માં તમે સપોઝ એક્સેપ્શનલ્સ કાઢો અને થોડુંક સારું અર્નિંગ્સ બતાવો, કારણ કે OMCsમાં બહુ મોટો ડીપ આવેલો, તો બહુ તો 8% છે. વી આર નોવેર ક્લોઝ ટુ દેટ 10-11% ઓફ કન્સિસ્ટન્ટ અર્નિંગ. પણ દેટ ઇઝ હાઉ ધ સ્ટોક માર્કેટ્સ વર્ક. 2 વર્ષ તમારા 6% અર્નિંગ હશે, પછી બીજા 2 વર્ષ 24% અર્નિંગ હશે, તો એવરેજ કાઢી લો. બહુ શોર્ટ ટર્મ અર્નિંગ્સની ચિંતા નહીં કરવી. ઉલટું અર્નિંગ્સ ખરાબ આવે, તમને ચાન્સ મળે છે ટુ ટોપ અપ યોર એવરેજિંગ ઓફ SIP ઇઝ ગુડ. ઇનફેક્ટ હું લોકો જ્યારે SIP કરે ને ત્યારે પહેલું કહું છું કે SIP કરો, ભગવાનને પ્રાર્થના કરો કે પહેલાં 3 વર્ષ તમને SIPમાંથી ઘટિયા રિટર્ન મળે. ના, એવું નહીં. સારા મળશે તો તમારું એવરેજિંગ ઊંચું થતા કરશે, પછી 3 વર્ષ રાહ જોવી પડશે, પછી તમને લાગશે આ તો સારી ચીજ જ નથી. પણ 3 વર્ષ જો એવરેજિંગ ઓછું થયું પછી જે બેમ્બુ ટ્રી ઉગે છે એટલું સરસ રિટર્ન આપે છે કે તમારો પોર્ટફોલિયો કાયમ માટે લો બેઝમાં સારો થઈ ગયો.
So we'll be taking last 2 questions.
Yes. See, I can't talk stock specific, honestly. I'm personally little wary on this sector and the valuation at which it is quoting at. A lot is happening because of government subsidy. સો આ ઇન્ડસ્ટ્રીમાં શું થઈ રહ્યું છે તમને સમજાવું કે જેમ કે ચાઇનાની સૌથી મોટી સોલરની કંપની છે, એની કેપેસિટી 90 ગીગાવોટ ઇન ટર્મ્સ ઓફ મોડ્યુલ અને અરાઉન્ડ 50 ગીગાવોટ્સ ઇન ટર્મ્સ ઓફ સેલની કેપેસિટી છે. એટલે વિચાર કરો, એટલી તો આખી ઇન્ડિયાની પુટ ટુગેધર પણ નથી. અને ચાઇના લો કોસ્ટ મેન્યુફેક્ચરર છે. જો આપણી ગવર્મેન્ટ પ્રોટેક્ટ ના કરતી હોત કસ્ટમ ડ્યુટીઝ ને બધું ડ્યુટી રાખીને, તો આપણી ઇન્ડસ્ટ્રીનો કોઈ સ્કોપ જ નહોતો કે આપણે એની અંદર પૈસા બનાવી શકીએ. પણ ગવર્મેન્ટે મેક ઇન ઇન્ડિયા કરવું છે, ચાઇનાની ડિપેન્ડન્સી કટ કરવી છે, વિચ ઇઝ અ ગુડ થિંગ. તો બેલેન્સ કરીને એટ અ બેલેન્સ કોસ્ટ આપણી કંપનીઝે ઇન્સેન્ટિવાઇઝ આપે છે. મને પર્સનલી એવા સેક્ટર કે વિચ ઇઝ એટ અ લોટ ઓફ ધ મર્સી ઓફ ધ ગવર્મેન્ટ, આઈ એમ લિટલ સ્કેર્ડ. કારણ કે શું થાય કે નોટ કે ગવર્મેન્ટે એ લોકોને હેરાન કરવા છે, પણ કાલે ઉઠીને કંઈક સોશિયલિસ્ટિક સ્કીમ વધારવી પડી, ઇન્ફ્લેશન હાઈપર થઈ ગયું અને ગવર્મેન્ટે એ પૈસો ત્યાંથી કાપીને બીજે કરવો પડ્યો, તો દો સેક્ટર કેન હેવ અ હાર્ડ ટાઈમ. એટલે પ્લીઝ આ માર્કેટમાં સર્ટન પોકેટ્સ યુ હેવ ટુ બી કેરફુલ ઓફ ધ વેલ્યુએશન. એનીથિંગ કેન હેપન ઇન દેટ કેસ. આઈ થિંક આઈ એમ સોરી, હી ઇઝ નોટ ગોટ અ ચાન્સ, સો આઈ અલાઉ.
હવે મારે એક બીંગ અ ક્લાયન્ટ તમારી પાસે આવ્યો, એવી જ નાનો એક ક્વેશ્ચન પૂછવો છે. આ લોકોને બહુ મોટા, તમારે બહુ નાનો ક્વેશ્ચન છે કે તમે કીધું મ્યુચ્યુઅલ ફંડ વિશે આટલું બધું બરાબર છે, જતા ડેરિવેટિવ્સમાં છે. હવે અમે મ્યુચ્યુઅલ ફંડમાં આવવા માંગીએ છીએ, તમારું શું કેવું છે? લાઈક મલ્ટી કેપ ફંડ છે, ફ્લેક્સી ફંડ છે, લોંગ શોર્ટ ટર્મ છે, અને હવે તો કેવું છે કે સ્પેસિફિક સેક્ટર વાઇઝ પણ આ લોકો ફંડ્સ કાઢે છે બહુ સારી રીતે, અને ફંડ મેનેજર બી બહુ સારી તેમાં એસોસિએટેડ હોય છે. તો કયા ફંડ મેનેજર અને કયા સેક્ટર વાઇઝ જવું જોઈએ કે ફ્લેક્સીમાં કીધું એમાં શું ક્યાં આગળ જવાય જેવું છે અત્યારે ફ્યુચર માર્કેટ માટે, અને આપણા ક્લાયન્ટ્સને બી આપણે સજેસ્ટ કરવું હોય તો કઈ રીતનું કરી શકાય? મારા થોડુંક
શ્યોર શ્યોર. એક તો આ નંબર છે, અને હું તો પણ એટલે આ તો જસ્ટ ઓન અ લાઇટર નોટ, કમ ટુ ધ ઓફિસ, મોસ્ટ વેલકમ. જનરલી કોઈ બી મ્યુચ્યુઅલ ફંડના ક્લાયન્ટ જોડે બેસું ને, હું પહેલાં 45 મિનિટ્સ, વેધર એ 5,000ની SIP હોય કે 5 લાખની હોય કે 50 લાખની હોય, હું પહેલું 45 મિનિટ્સ ક્લાયન્ટની સાયકોલોજી સમજું છું. એટલે તમને ખબર છે ને, મ્યુચ્યુઅલ ફંડમાં 2 પ્લાન્સ છે. તમે ડિરેક્ટ બી કરી શકો છો, રેગ્યુલર બી કરી શકો છો. તમને જો બધું આવડતું હોય, તમે ટ્રેક કરી શકતા હો, અમારી જેમ સપોઝ ફંડ મેનેજર્સને મળતા હો, કન્વિક્શન બિલ્ડ કરી શકતા હો કે કઈ સ્કીમમાં પૈસા નાખવા ના નાખવા, તો તમારે ડિરેક્ટ જ કરવું જોઈએ. કારણ કે અમે લોકો રેગ્યુલરમાં તમારા જોડેથી 70 to 80 બેઝિસ પોઈન્ટ્સ વધારે લઈએ છીએ, એટલું તમારું 10 વર્ષનું 15 વર્ષનું રિટર્ન અમે ખાઈ જઈએ છીએ. પણ એ મહેનતાણું અમે એટલે લઈએ છીએ કારણ કે એની સામે જે હું ટ્રાવેલ કરીને મારા ક્લાયન્ટને લખું કે ભાઈ આજે એસ નરેનને મળ્યો કે આજે પેલા અનુપ મહેશ્વરીને મળ્યો, કેમ હોર્સિસ માઉથી સમજીએ અમે શું છે, કશું નથી, એ લોકો બધા હોન્ચોસીઓ મેનેજિંગ ધીસ ફંડ. સો ફર્સ્ટ થિંગ વોટ યુ ડુ ઇઝ, ધીસ ઇઝ વોટ આઈ ડુ વિથ માય ક્લાયન્ટ્સ. ફર્સ્ટ યુ ડુ બજેટિંગ, બેઝિક તમારી બધી ઇન્કમ સ્ટ્રીમ માઇનસ યોર એક્સપેન્ડિચર, કેટલું તમે બચાવો છો, બરાબર. પછી તમે એક આંકડો કરો અને અમારી પાસે એનું કેલ્ક્યુલેટર છે, તમે આવશો હું તમારું રન બી કરીશ કે તમારું મંથલી એવરેજ ખર્ચો શું છે. સપોઝ તમારો મંથલી એવરેજ ખર્ચો 1 લાખ રૂપિયા છે, રાઈટ. EMI નથી ગણતો, EMIનું સેપરેટ પ્લાનિંગ કરવાનું. એસઆઈપી આપણને એડવાન્ટેજ જ એ આપે છે કે તમે ફાઇનાન્શિયલ ગોલ સાથે પ્લાનિંગ કરી શકો, જે કદાચ ડિરેક્ટ સ્ટોક્સમાં ડિફિકલ્ટ છે. હું પોતે ડિરેક્ટ સ્ટોક્સનો પૂજારી છું, કારણ કે મારા પપ્પાને તો ગુસ્સો હોય કે તું મ્યુચ્યુઅલ ફંડ ચાલુ કેમ કર્યું, રાઈટ. પણ આઈ હેવ સીન કે આ બહુ ઓર્ગેનાઇઝ ઇન્ડસ્ટ્રી છે. તો તમે 1 લાખનો જે ખર્ચો છે એ તો ચાલુ જ રહેવાનો છે, એમાં ઇન્ફ્લેશન આવવાનું જ છે. એટલે તમે જ્યારે રિટાયરમેન્ટ એજ પાસે આવશો એટ 55-60 ત્યારે 1 લાખનો ખર્ચો લગભગ 3.5 લાખનો થઈ ગયો હશે. પછી તમારી ઇન્કમ બંધ થઈ જશે, તમે રિટાયરમેન્ટ લીધું, પછી તમે 80 યર્સ સુધી લાઈફ એક્સપેક્ટન્સી ગણો, બરાબર છે, ત્યાં સુધી આપણે આખું ગુજારણ કરવાનું છે. તો મારું કેલ્ક્યુલેટર એ આંકડો આપશે કે ખાલી ઇન્ફ્લેશનને બીટ કરવા અને હમણાં જે લાઈફસ્ટાઈલ જીવો છો એ જીવવા માટે તમારે કેટલું કોર્પસ જોઈશે બાય ધ ટાઈમ યુ આર 55-60. સપોઝ એ કોર્પસ આવ્યું 5 કરોડ, આ તો હવામાં અમારો, તો એ 5 કરોડનો ટાર્ગેટ અચીવ કરવા હમણાં તમે મહિનાની કેટલી એસઆઈપી કરશો કે તમે અચીવ કરી શકો એટ ધ રેટ ઓફ 11-12%. આપણે 15% નથી બતાવું બધાને, હમણાં બધા પોર્ટફોલિયો જોશો 18%. એટલે અમે કહીએ ને કે હવે તમને આવનારા 5 વર્ષમાં 12% જ મળશે, તો કે હું તમારી જોડે નથી કરું, બીજે કરવું છું એમ, બરાબર. આપણે 11-12% કહીને 15 આવે તો સારું જ છે, પણ 11-12% પેન્સિલિંગ કરવાનું કેલ્ક્યુલેટરમાં, એટલે તમે સેન્ડ બેગિંગ કર્યું અને તમે સપોઝ એ નંબર આવે છે 1.5 લાખ રૂપીસ કે 1.5 લાખની તમે મંથલી એસઆઈપી કરો તો 20 વર્ષ કરશો તો તમારો 5 કરોડ અચીવ. આ તો જસ્ટ હું મને આઈ ડોન્ટ હેવ ધ કેલ્ક્યુલેટર બટ હવામાં કહું છું. હવે તમે કહો મારી પાસે 1.5 લાખ છે નહીં પાર્થિવભાઈ, શું કરું? મેં તમારું બજેટિંગ કર્યું છે, તમારા બજેટિંગમાં મેં જોયું કે તમે 50,000ની તો કરી જ શકો છો, તો હું તમને પહેલાં 50,000ની એસઆઈપી કરાવીશ, પછી દર વર્ષ પછી તમારું માથું કહીશ કે આ 50,000માં 10% કે 15% ટોપઅપ કરો, રાઈટ. તમે બિલીવ નહીં કરો કે આ 50,000માં ફક્ત તમે 10%નું ટોપઅપ કરો વર્સિસ તમે 1.5 લાખની એસઆઈપી 5 કરોડ માટે કરો તો 50,000માં 10%ના ટોપઅપ સાથે તમારી પાસે 15 કરોડ હશે, રાઈટ. સો આ બધી ટેકનિક્સ છે. હવે ઇન ટર્મ્સ ઓફ ફંડ્સ, તમારી એજ, તમારું ફેમિલી પ્લાનિંગ, હવે હું તમારી લાયબિલિટી સમજવાનું ટ્રાય કરીશ. તમે કહો કે મારી આટલીની હોમ લોન ચાલે છે, મારું આટલું પર્સનલ લોન છે, તો હું તમને બહુ અગ્રેસિવ ફંડમાં નહીં કરાવું. અહીં કાલે ઉઠીને 2 વર્ષ પછી તમને કદાચ ઇમરજન્સીની પૈસાની જરૂર પડી તો તમે પીપીએફ નથી તોડવાના, તમે આ જ તોડવાના છો. હવે એમાં મેં તમને મલ્ટી કેપ આપ્યા હોય અને મલ્ટી કેપ 12% ડાઉન હોય, વિચ ઇઝ નોટ અ બેડ થિંગ, યુ આર સ્ટીલ અક્યુમ્યુલેટિંગ એટ ધ 12% ફોલ, બટ ધેન યુ વિલ કર્સ મી, રાઈટ. સો આઈ હેવ ટુ અન્ડરસ્ટેન્ડ યોર લાયબિલિટીઝ, આઈ હેવ ટુ અન્ડરસ્ટેન્ડ યોર ફેમિલી સ્ટ્રક્ચર. કદાચ કાલે ઉઠીને તમારે કોઈ છોકરા માટેનું કોઈ ફીઝનું મોટું ગોલ હોય તો તમારું લિક્વિડિટી પ્લાનિંગ સમજીને મારે તમને ફંડ્સ આપવા પડે. ઇટ ઇઝ નોટ લાઇક વન સાઇઝ ફિટ્સ ઓલ. ઇટ ઇઝ ઇવન અ 5,000 SIP has to be properly planned and 5 lakh SIP also has to be properly planned. I hope I have given you what we do and what you can take from it, right?
Sure, just one last question from sir.
Bitcoin and Donald Trump making a reserve of Bitcoins.
Sir, I'm sorry, I'm totally zero at this. મને આનું નથી સમજ પડતી.
Like currency actually foreign future માં deregulate થઈ જશે because of crypto ના કારણે.
સર આ તમારો ક્વેશ્ચન બહુ ઇન્ટરેસ્ટિંગ છે, પણ ઓનેસ્ટલી આઈ હેવ નો નોલેજ ઓર નો આન્સર ટુ સે. પણ જે મોર્ગન સ્ટેનલીના હેડે મને કીધું, મેં બી આવો ક્વેશ્ચન પૂછેલો, કારણ કે એક નિગલિંગ ફિયર તો રહે. એ કે ડોલર ડોમિનેશન કોઈ વિઝિબિલિટી દેખાતી નથી કે નેક્સ્ટ 10 યર્સમાં એને કોઈ રિપ્લેસ કરે. અને યુએસ બિંગ સો પાવરફુલ ધ વે ઇટ ઇઝ, અને હવે ચાઇનાનું વર્ચસ્વ ધીમે ધીમે થોડુંક સ્લો થઈ રહ્યું છે, એટલે યુએસ ઓર ચડી બેસવાની કગારે છે. અને જ્યાં સુધી આ યુએસનું $33 ટ્રિલિયન ડેટ છે એ કરન્સી છાપ્યા વગર છોડવાનું નથી. અને જો કરન્સી છાપશે તો એને ડોલરને સ્ટ્રોંગ રાખવો જ પડશે બાય ધ ડોમિનન્સ દેટ ઇઝ ધેર.
બિટકોઇનને રિઝર્વ્સ રાખે છે એટલે ઇનડાયરેક્ટલી એમ કહે છે કે બિટકોઇન્સ ને ક્રિપ્ટોકરન્સી ઇઝ ધ વે ફોરવર્ડ કે પછી.
પણ એ તો સર ગોલ્ડ બી રિઝર્વ રાખતા હતા ને, ગોલ્ડ બી રિઝર્વ રાખે જ છે ને. ગોલ્ડ
ફિઝિકલ છે, બિટકોઇન્સ તો તમને ફિઝિકલ કંઈ.
યા એટલે એક હવે ડિજિટલ એસેટ ક્લાસ એ લોકોએ કરી છે, પણ એઝ અ ક્વોન્ટમ ટુ ધ ડોલર ટ્રેડ ગ્લોબલી વોટ ઇઝ ધ પર્સન્ટેજ ઓફ ધ બિટકોઇન ટ્રેડ. અને હું માનું છું ચલો બિટકોઇન ટ્રેડ એ વધશે, પણ એને 10 વર્ષ તો દેખાય છે કે એકદમથી એ ઓવરપાવર નહીં કરે. પણ અગેન ધીસ ઇઝ સમથિંગ દેટ ઇટ્સ નોટ આઉટ ઓફ ડોમેન ઓફ માય નોલેજ, અને આઈ હેવ નો આન્સર ટુ ઇટ ઓનેસ્ટલી.
લાઇકલી લાગે છે ઇનિશિયેટિવ 2025 કે 30 સુધીમાં 30% સુધી પહોંચે? કારણ કે આટલા ઇનિશિયેટિવ 10 વર્ષમાં લીધા પછી પણ 2% ઘટ્યું છે.
સર એનું કારણ છે કે આપણી સર્વિસીસ ઇકોનોમી હેઝ ગ્રોન લોટ ફાસ્ટર અને ગ્લોબલ ટ્રેડ બી તમે જોશો ને તો એટલો કન્ડ્યુસિવ નથી રહ્યો. પણ યસ યુ આર રાઇટ, બહુ મોટી ચેલેન્જ છે. ઘણા લોકો એવું કહે કે શું કરવા મેન્યુફેક્ચરિંગ ઉપર કરવું, પણ એનું ખાલી આપણે શેર બજાર સિવાયના બી એસ્પેક્ટ્સ હોય છે. ઇન્ડિયામાં જે ઘણું અનસ્કિલ્ડ લેબર છે અને ઘણી જોબ ક્રિએશન છે એના માટે બી, જેમ કે આ સોલર ઇન્ડસ્ટ્રી છે તો અમે વારી સોલરના પ્લાન્ટમાં ગયા તો ત્યાં જોયું કે કેટલા બધા લોકોને એમ્પ્લોયમેન્ટ મળે છે. હવે આપણે બીકોઝ આપણે આરઓઈ ને આરઓઆઈ ને આરઓઆઈસી જોઈએ એટલે આપણે શું કહીએ, આ બધી મગજમાં કરીએ કે ચાઇનાથી લઈને અહીંયા ટ્રેડ કરો ને, શું કરો, પણ એનાથી તમે જોબ્સ ક્રિએટ નહીં કરી શકો ને. એટલે ગવર્મેન્ટ કેટલો પૈસો આ સેક્ટરને ઇન્સેન્ટિવાઇઝ કરે છે, ગેરંટી આપું છું ગવર્મેન્ટ ઇન્સેન્ટિવ વગર મેન્યુફેક્ચરિંગ બૂમ ના શકે. અને સારી વાત એ છે કે ઇન્ડિયામાં હાઈ પ્રિસિઝન એન્જિનિયરિંગ છે, ફોરેન કંપનીઝને બી ઇન્ડિયામાં હવે ગ્લોબલ કેપેસિટી સેન્ટર્સ બનાવવા છે. આઈ થિંક એકલું ઇન્ડિયાનું મેન્યુફેક્ચરિંગ નહીં, ગ્લોબલ એમએનસીઝ એમનું રિલોકેશન બી 5% બી કે 10% બી ચાઇનામાંથી કરશે ને તો તમે જે આંકડો કહો છો ને કે આપણે 18% ઓફ ધ જીડીપી પહોંચી જઈએ વિથ એન એક્સપેન્ડેડ જીડીપી, એ થઈ જશે એમ થઈ જશે.
Thank you everyone. Much appreciated. Thank you for your time. Thank you Parthiv bhai for the amazing session, and really appreciate you taking out time and sharing your knowledge and wisdom. Much appreciated.
Thank you for inviting. Thank you guys.
Just be seated. We have another amazing session by Nitin sir, and especially at the time where markets are hitting all-time highs, it will be great understanding his perspective as well, considering how amazing the value investor he is. Thank you.